We're live again for, sorry, I just put the pillow behind me. There we go. We're live again for another episode on the Mike Rosehart Show, discussing everything today about real estate, personal finance, whatever questions you guys have. I hopefully will have some answers for you. Let's talk first about the market and where it is. So we had a really horrible inflation reading yesterday. It was expected to be 2.9, came in 3.1. That's an accelerated inflation reading at well over, and I would say 50% over target for where they would like it to be, right? Because we're looking to get inflation down 2%. Since 2021, the spring of 2021, inflation has been elevated at 5, 6, 7, 8, 9% readings. There's been some shadow readings that were 10 to 15% in certain categories like housing and food, which is where we spend like 80% of all of our money. We had many double-digit readings on groceries and rent for several of the readings in the last 3 years. So 2021 was horrible for inflation ramping up. 2022, also horrible for inflation. 2023, pretty horrible for inflation as well. And now we're into 2024, basically a fourth year of bad readings. And again, inflation is still elevated. And now the risk is that the cat is out of the bag and we may need to be higher for longer. Now, what does that do to risk assets and things like the current AI bubble? And when I say AI bubble, I mean anything that mentions the word AI and is pumped up 400% in the last 15 months or so of trading. Names like NVIDIA, as an example, which again, solid company, great cash flow, just trading at a multiple that makes Clown Town look serious. Trading at values that it needs to grow at, assuming no competition, assuming everything goes right for several years, that all the growth expectations come exactly into fruition. And let's be honest, things don't ever go to plan. Things happen. Competitors come in and eat your lunch. Sam Altman might make a competitive company that does the same thing, or Microsoft, or any of the other tech companies, or some new tech company we don't even know exists yet, could have some better software or better hardware that comes out in the future, and we don't know. There's a lot of things that we don't know, and paying for the future growth is dangerous when you pay at 50, 60, 70 times earning multiple. When you pay a 70 times earning multiple, at the current, if they can just maintain what they currently have, which who knows, they could lose that too. It's not something that's so stable as like like real estate, as an example, is fairly stable, right? There's only so much of it. It's hard for competitors to come in and take away land. There's so much land. But they can come in and another company can figure out how to make chips for 40% less and flood the market with 1 billion chips. That could happen in the next 3 years. We don't know. China could invest heavily in something and decide they're not going to sell chips. They're not make chips for NVIDIA anymore. We don't know. There could be a war between the US and China. There's so many geopolitical risks, so many risks out there, that I think paying for some of these companies' valuations is risky. And when I talk about risk assets, let's look at most of the tech companies right now are trading at 400 and 500% where they were. Meta, as an example, $89 a share, December 2022, now almost $500 at some point. NVIDIA is now like has overtaken Meta, overtaken Amazon. I mean, its market cap is bigger than Amazon. You're saying a company that was worth 1/10 of Amazon, not even like a year or two ago, is now worth more than Amazon. The Goliath in online AWS storage, as an example. Like Amazon's website and their sales of all the stuff that we buy off of their website is just a fraction of what they do. A lot of people don't realize that they're actually huge in the cloud storage space. They basically store almost all the data on the internet. That's pretty wild, exciting news that they're looking to now. Their next target to overtake is Apple, bigger than Apple. They'll be one of the biggest companies in the whole world, which is wild to me. And maybe that'll be justified. Maybe they'll grow into those shoes, especially with all the capital they're receiving, right? With the 1.9 trillion market cap, there's going to be a lot of capital that, NVIDIA is larger than most countries' entire index, their entire GDPs. Like what? Entire countries? Every company on the entire exchanges? It's getting a little crazy. But it's all the other small names too in that tech sector. The Nasdaq's up 80% or so since 2022 December lows. It's a wild ride. Bitcoin, another of the risk assets, a lot of the altcoins are going to follow, I think, has been pumped 170% since 2022 lows. I've unloaded some of my Bitcoin to buy one of the more recent motels we just bought. So that was more of a nothing to do with trying to short it or whatever, but essentially I've gone from a super long position on Bitcoin to pretty neutral. And in fact, I have a short open right now on a very, very small position on some of the crypto miners. I think that with the halvening happening, the miners are going to struggle. Tech is making extreme advancements such that a lot of the hardware that they have is going to be obsolete and useless in 2 or 3 years. So I'm extremely bearish on the miners specifically. So yeah, a week ago I unloaded again some of my Bitcoin, just timing for the motel project. I had to do it. It wasn't the top. Unfortunately, now it's ripped to what, 70,000 Canadian a token, and it's still rising. Who knows where the top will be, right? It could keep going a little ways yet. But what I do know is that there will be a pullback. Typically around the halvening, it's the beginning of another 4-year cycle, right? So we should have a lot of choppiness between now and then. And so there is a lot of risk on a lot of these risk assets, which is any asset that is really trading on speculation, on belief, on especially when you think through most of the tightening cycles. Like, we are in an extended elevated interest rate cycle right now, and rates will fall. It's been higher for longer. In 2022, they started jacking up rates. They said every analyst was like 2023 things come down, 2024 January guaranteed. That never, all those targets kept going. It's been higher for longer. That is the narrative that played out. We are in higher for longer. But it may come down. And when it does come down, the only reason that rates come down is the economy is in the shitter. So the more likely scenario is that when rates do finally fall, they fall fast, and that's because banks start failing, which we should see. Private equity, small businesses, look at the Russell 2000. Most businesses are struggling right now. In the financial sector, in the real estate sector, a lot of real estate giants are close to underwater. So there's a lot of pain that's ready to rear its head up. And I think a lot of us need to be careful of that and be cognizant of the fact that there's a lot of pain that comes up. And typically during those tightening cycles, equities, like risk assets, don't do that well. It's really turbulent. So be careful after seeing such crazy growth to jump on the train at the end of the rally. It's better. It'd be great if you if you believed in Bitcoin, get in Bitcoin at 30,000, 20,000 a token and have a long-term hold, no problem. Getting in now at 70,000 Canadian token, you may make some money. Who knows? I don't know where the top will be. But some of these risk assets, they're risk assets for a reason. There's a lot of risk inherent with that, and there's a lot of volatility. And tomorrow, the price of Bitcoin could be half of what it's trading at right now. Not tomorrow, but like, you know what I mean? 6 weeks from now, 12 weeks from now, 20 weeks from now, we could go through a bear news cycle, and there could be pain. And I think that it's important to hedge, which means just protecting. If you're going to have a long position, either be prepared for that and accept the fact that you may have a portfolio worth half of what it's worth today, and you're okay to hold through that and don't dump down the bottom, or buy something that protects you. So as that falls, you make some money as well to buy more of that dip. Depends on where your position is on it, but just be careful, guys, because that's what's going on in the real world right now. Hello from Alberta, David. How you doing? Someone says Nvidia is worth more than the entire Chinese stock market. And China has billions, not billions, but over 1 billion people. Best time to offload Bitcoin might be now. That's true. I don't know. ETH, XRP, and other alts will only outperform the Bitcoin juice is over. I don't know. I don't know if that's true. I've heard different opinions on both sides. I got a lot of Bitcoin bulls and crypto bulls in my DMs sending me charts that's going to the moon, $1 million a token for Bitcoin, et cetera, and so forth. And there are some compelling arguments on the Bitcoin bull side. There are also some compelling arguments for the bears. What is intrinsic value, right? What is the value of the current computer network and the utility of said performance network behind Bitcoin? The blockchain, the value, a lot of it is in, perceived value in the marketplace. So are people actually transacting in it? Do they believe it's a store of value? The new movement on the ETF side is extremely bullish, right? That now it's accessible by the US public markets. We've got some great ETFs, and some of those ETFs will go bankrupt. There'll probably be only 2 or 3 in the end that are the main ETFs that everyone uses to buy and sell Bitcoin. It will not be by way of just going bankrupt by gone. It's going to be like another of the Bitcoin holders will acquire, and they'll merge together and do a bigger market cap, larger fund. So I don't know about the altcoins. Typically the altcoins tend to rally after Bitcoin. It kind of leads the way, right? So that would make sense what you're saying. But again, we have no way to be sure. Even technical analysis is not all that reliable. What has happened in the past doesn't necessarily predict the future. A lot of people use technical analysis as one of the 6 ways to value a company or value a stock, and they will say that, breaking out the charts and trying to understand the TNA will give you some sort of insight. And it is one of, again, 5 or 6 ways that I've seen that are reliable. Another of the great ways to do it, which you can't do for Bitcoin, is using the earnings power value, or EPV, and looking at the discounted cash flows. Again, Bitcoin has no cash flows; it's not really a business. And then looking at the net asset value and comparing them, right, and looking and see if there's additional value there. If you can find the right catalyst to unlock that value, that's value investing, right? It's one of another ways to value stocks. People rely on historical stuff. Anyway. I don't want to get into a whole stock lesson here today. It's good to understand basic economics. It's good to follow some of what's going on in the news because it impacts our businesses. And at the end of the day, this channel is about growing your wealth, and growing your wealth is about understanding how to deploy your capital. And I think one of the most effective ways to do that is to build or run or buy businesses. And that could mean buying small pieces of lots of companies and stocks. Over the last year and a half, you could look at stocks like bank stocks, like Bank of Nova Scotia, Bank of Montreal, the big 5 banks in Canada. They're down 15 to 18% on the 1 year right now. So your performance is negative 15%. But then inflation's like 7% on top of that. You probably got a dividend from the stock, but still you're down 20% if you own financial bank stocks through this time. And if you own tech stocks, you're up 150%. You own Bitcoin, you're up 150%. There's been a huge discrepancy between value stocks like financials, dividend stocks, quality stuff, and tech stuff. There's been a huge disparity. Typically, over a long period of 1 or 2 business cycles, it will all balance out. They won't extraordinarily perform, right? You'll have a good, as rates fall, people will jump to dividend stocks again. Right now, treasury bills are paying 5 and 6%, and so the allure of a 5 or 6% dividend yield on a bank stock with significant risk, by the way, because bank stocks are heavily invested in real estate and they have a lot of exposure to falling rates, right? Potentially could be painful for them. The spreads get tighter. So there's risk, I think, in those assets as well, even those stable, big bank financial type stocks. So where do you put your money? Well, at the end of the day, I think the prudent advice is to spread your money over many different buckets and put a little bit in everything. Now, if you have an area where you have a competitive advantage, where you have alpha, and most people don't have alpha in the stock market, reading some articles doesn't give you alpha, doesn't give you edge. Edge means you have something that no one else or very few of your competitors have. And in real estate, or in business, it's very easy to develop an alpha or an edge. An edge gives you some sort of superpower where you can get, like in real estate as an example, I can go negotiate. I just bought a house in Sarnia 2 days ago. And it was a house, we bought it for $189,000. Had a small fire in the bedroom, needs a bit of work. My crew will be able to clean that up in like 6 to 10 weeks, let's say. Call it 3 months, worst case scenario. Now that property, $189,000, is worth $450 fixed up. Now we can make $200,000 spread on that. I was able to act on that property in 2 hours. I didn't need to look up comparables on the property. I knew the value of the property immediately because I had, again, alpha or edge. I've already done an expert analysis on the whole area years ago. I know it like the back of my hand. And all of that information allows me to buy Granny's house at way less than market value. It's like, imagine you go buy a share, a Bitcoin from someone right now. You could actually do this. This is actually the nice thing about Bitcoin is there's no regulation. So I could go and find someone. There's no open exchange. If there was no open exchange, real estate has no open exchange where you can find out the value of things, right? Because every property is so different. But in like something like a commodity like Bitcoin, where they're all the same, you can go, imagine like if Bitcoin didn't have an exchange and you could say, hey, I'll buy your Bitcoin for $35,000 right now. And I can go sell on the exchange for 70, like I can buy it for 50%. You can do that with businesses in private equity and in real estate. People don't know what they have. And the cool thing about real estate and businesses is that you can flip the business or change the business or make it better, and you can be in control of management. When you stock invest, you control no management isn't your bitch. You're their bitch. They're trying to serve you, management's trying to serve the shareholder. But again, management is in control. You have no control. That's why I like small businesses. That's why I like businesses where I can go in there and I can physically control the outcome of whether or not it's profitable, what the expenses look like, what the revenue looks like. I can go in there, I can drive revenue. That's why I like real estate. In the stock market, you don't have the ability to do that. You're investing in, like if the founder of NVIDIA dies tomorrow and all their contacts go with it, and the new CEO they bring in isn't as competent, or maybe some key staff leave, you're fucked. You have no control over that. You have no way to deliver any value. You're buying in and praying. And that's the danger, I think, in going all in. That's what we talked back a second ago about diversity. You want to put your assets into several buckets. I like lending as my bond category, so to speak, my fixed income. I like a fixed income category. I love real estate as an exposure, but even within real estate, there are several different buckets, right? I've got commercial properties, I've got, residential properties. Within real estate, you might have several different properties. You're not gonna go all in on one property, you might have a stock bucket where you're exposing yourself, and not just tech stocks. Don't just buy like Tesla and Nvidia and a few popular buzzword names. You want to have exposure to the entire S&P 500. You want to have exposure to Brazil, Russia, India, China. Getting exposure to Russia is challenging right now since they've blocked basically foreign ownership through the U.S. listed exchanges. It's very hard to get exposure to some of these companies right now, but you should have a piece of China right now as an example. The Chinese stock market's being destroyed. You don't think China's going to be a world power in the next 20 years? They've already overtaken the U.S. in terms of GDP. In real terms, India and China in the next 10, 20 years are going to produce a ton, especially once they utilize AI to drive efficiency in what each person in their country can produce and consume. So I'm extremely bullish on some of the emerging markets. Having exposure to every country is important. And there are world indexes and ETFs you can buy that will give you exposure to every company. You can own a small, tiny fraction of every company in every single index in the whole world. So if someone drops a nuclear bomb in the United States, right in New York, right in California, that would hurt your portfolio, but it wouldn't end it, right? So it's important to have these black swan events prepared for. And so the stock market is a place, public equities is a piece of, I think, something you should invest in. It's a safe bucket to put money into, right? And then there are some private businesses. I love private businesses. If you know any people, like your friends of yours, and you want to be involved in their business in some way and invest some of your time and some of your money, another great bucket to add capital into. There are just so many other asset classes too you can look at, like gold and silver. It should be 1 or 2% of your portfolio. I think cryptocurrencies should be 1, 2, 3, 4, 5% of your portfolio. If you really want to study Bitcoin and you're all in on the idea, I could see an argument for 15 or 20% of your capital into Bitcoin. It's hard for me. I think the challenge, is that most people aren't experts and they haven't spent the time and they don't have any competitive edge. And so when you go all in on a few risk assets, you risk losing everything. And that's the one thing that will stop you from being extremely wealthy in your life, is a lack of diversity. So although the returns can be much higher going all in on one thing, I think it's smart to spread some of your assets out, especially if you've got a big windfall, you sell your business, you have a $5 or $10 million, big windfall. Take 10% of that, take $1 million and put it away somewhere you can't touch it, and invest it in a bunch of safe assets. Keep going. If you have a competitive advantage in your business, dump most of your money into that. I can see the argument for putting most of your money into your business where you're in control and you can drive an extraordinary return. Again, it depends on if a lot of people don't have that ability. They work for a company or they have a ceiling on what they can make, and they want to take their money and put it into asset classes that are a bit safer, I would say. Kai says, are you holding yours or unloading some now? I still do have some Bitcoin and some ETH. I have also some Ultra tokens. I have, my largest holding is ETH. ETH followed slightly by Bitcoin right now. So I do still have we'll call it more than 6 figures. I won't disclose how much I have, but I have more than 6 figures. It's a very small percentage of my net worth. So, if that 6 figures in Bitcoin and whatever 6 figures in ETH, if that went to zero, to me, it's not that important. Now, if I saw a big dip, I saw us lose like half the value, I might put 7 figures into it. But right now I'm focused on real estate. And that's because I have this goal right now, trying to buy 10 or 20 motels. I want to build a nice real estate business around that. I have a competitive advantage where I can buy a motel, spot one, for 1.7 million. And it's worth $4 million. And I can get from 1.7 to 4 million with a couple hundred hours of my time, putting in a good crew, stabilizing the asset, and maybe $500,000 in renovation capital, et cetera, to stabilize the asset. Where else, regardless of what the market does, if real estate market goes down 5%, I still go from 1.7 to 3.5 million. So it's like, where else can I buy something and in a year take my money and with leverage, I might put $1 million down and take $1 million and turn it into 2 in 1 year. Where can I go and take $1 million into 2 with no risk, regardless of what the market does? Imagine if you could buy Bitcoin, and if Bitcoin didn't change in price at all, I could double my investment on that. That's what it is for me in real estate. Those opportunities, I just can't not chase them. It's so safe. It's so easy for me that I need to get my head out of trying to options trade, and get my head out of trying to take on these fringe risk asset opportunities when there just are so many great opportunities in real estate. So for me, that's what I'm doing. And if a good business came along that I was looking at buying and I had a way to control that business and drive additional value, regardless of what the market does, I would look at those opportunities first and foremost before I would speculate. Now, there is some room for speculating. Like I said, I still do have some crypto. I still do have, some stocks, and there are some that I don't touch at all. And then I still have an active options trading portfolio too, which I'm trying to do away with. Yesterday was a great day. I made like 6% of my portfolio in a single day. If I get like 4 or 5 more of those days, if I get a bad month on the NASDAQ and I see my shorts print some money, I'm going to close out the shorts. I've got a few names that I'm shorting with defined stops, though. I'm not naked shorting. I have a stop out on all the positions I've opened there. But that is, to be honest, a distraction. The time I spend watching the stock market, the time I spend, trading stocks and options contracts is actually a waste. I definitely don't generate $3,000, $4,000, $5,000 an hour doing it like I do in real estate. In real estate, every hour I put into that business, working towards acquiring new properties, stabilizing the ones that I have, working on my high-level CEO tasks in my real estate business, generates much more per hour. And so mentally, I'm trying to tell myself, hey, Mike, you need to be spending your time on high-value things where you can make $3,000, $4,000, $5,000, $10,000 an hour. That's where you need to be focused. I'm trying to tell myself, like, I need to be making more than 7 figures a year, and I'm not going to do that options trading. Though options trading is scalable, it's difficult to outperform the market net of fees in the long term. There are very few options traders with large amounts of capital that scale up, that can beat the market. There are a few hedge funds who have done it, very few, and some of them have blown up. So it's dangerous, and I don't think that I have what it takes. I don't think I want to do what it takes to get the competitive edge that I need to build basically like a small hedge fund. You need to have folks in PhDs that study the market specifically 60, 80 hours a week. And that's important. I think to have that edge, to be competitive, you need those things. If you're going to trade, like I live my life in a way that I'm trying to work towards being with my kids, be able to shut myself down if I want to. I want to take a day off tomorrow because my kids are sick. And if I have a bunch of trading positions open like that, it becomes stressful. And so it just isn't a fit for the retirement lifestyle that I want. And I find myself checking it too. Whereas like real estate, I don't find myself checking the price. When I have a trade position open, I can't not look at it every 30 minutes. I'm compelled to look at the price and to see if I can adjust my trade in some way. And that's just my personality probably, but I can't not think about it. My brain always is thinking about it. And it's better if my brain's thinking about business things where I can generate real alpha, real value. So that's just a personal thing for me about the options trading. So Johnny Bahama says, thoughts on long-term housing market in London. So I've got an interesting theory about housing in Ontario. And I think if we didn't have the insane, so I'll say I'm bullish, I'm long-term bullish on the prices, specifically for land. But houses sit on land. In residential areas, I think there's still going to be a bullishness. We're seeing a trend towards reversing zoning regulations completely in the municipal level. Meaning right now, like you have a single family house, it's zoned single family, you need special zoning to make it a duplex, make it a triplex, make it a fourplex. That's going away. They're getting rid of all zoning on small residential and allowing people to go up to 4 units, 5 units on any property, anywhere. They're allowing them to build up. They're allowing them to hack the house in half and make a semi-attached, make a basement apartment, whatever you want, make it in 3 units, 4 units. That's now a thing, and that's coming. I'm extremely bullish for that because we need that. We have no housing available, and we're way behind. We're not creating near enough housing. It's a real problem. So it's good for the people. It might drive price per unit down. There's a thought I had around that, and I was like, Amazon, interestingly, is selling houses for $20,000, ready to go. Full tiny houses you could drop down on a pad. You pour a pad, you drop it in your backyard, boom, you have a secondary dwelling unit. Really cheap. You could even build it for like less than 60 grand, 80 grand before, even 100 grand for these units. So it's really cheap, which is going to drive the cost per unit down when you can produce it so well. But we have this immigration problem where Trudeau is allowing 1 million immigrants and even more to come in. And they're flooding into cities like London, where we have the largest university in Canada and the largest college campus in Canada together in one city. The largest college in Canada and the largest university in Canada, both in London, Ontario. So London has a challenge of 1 in 4 people in London are students. 1 in 2 people in London directly work or have direct ties to students in some way. So half of all London. So it's very much a student town. A lot of young blood, a lot of smart blood, which is good. We have a lot of tech. We have a medical school, dental. One of the best. We have the best business school in Canada in London. Ivy. I don't know. When I was going to school there, it was the best. I haven't done research recently, but like it crushed Queens and Rotman and all the other shady business schools. No offense. I went to Ivy, so. But yeah, so I guess to circle back, I think we have a real supply demand problem for land and for units and for housing. And I think the solution to that is going to be accessory dwelling units. I think it's going to be relaxing zoning. One of the biggest costs to build right now is fees, development fees. Specifically in Toronto, like a third of the cost of building an apartment building is just fees that you pay to the municipality. In the last 5 years, fees have gone up 100%. So they've doubled the cost to build. And that's, again, government tax effectively. I don't know. Will they relax that? I don't know. The government's not like the mafia, right? They like to collect their piece of everything. Some of the development charges alone, like just to build a house, like 200 grand in development charges. It's like, what? To bring a sewer in? You're just for the permission? I have to pay for the sewer to be put in, but you want a $200,000 fee for like planning. It's like, what? Why do you want 200 grand on a residential house to connect into? This was a property that had sewer and going across the street. It was on septic. It had no sewer, but the tie into the sewer at the street that I had to pay the cost to tie in and run the pipe just for the right to do that, 200 grand. What? The city fees are unreal. So anyway, circling back to the idea around housing long-term, extremely bullish because there's only so much land. And people like to be connected. They don't want to live way out in the middle of nowhere. So if you have land in a prime location, it will hold its value and it will improve in value. But the price of building is going down. Now, building custom homes, like going to frame, and that is going up. Labor costs are on the rise. Inflation has gone crazy. Labor inflation has gone crazy in the trades. Right now, the trades are suffering, so it's easy to find unemployed contractors and things like that. But the next bull market cycle, these guys are starting to expect crazy wages. Some of them are like looking for $40 to $50 an hour, where like 5 years ago, you get that same guy for 25 bucks an hour. Now, part of that is just inflation has gone mad. Rent has doubled in 5 years too here in London. Like you could rent a bachelor for like 900 bucks. Now it's like 1,700 for that same apartment in a 5-year span. Just unreal. In a 10-year span, it's even worse. So there are real underlying challenges that are driving the price of building materials up. But technological efficiency has made it interesting. Cops here in London, as an example, Cops Build All. They're like the local Home Depot alternative or Lowe's alternative. They have a kit that's approved with the city for a house that comes in a box that they deliver with your plumbing, your electrical, everything in it. And they're working with the city for an automatic approval. That will allow us to build way faster. One of the biggest hurdles right now is that it's hard to build, expensive to build, and takes years to get through the approval processes in some cases. The city is very slow. Municipality is very slow here and not friendly. So there's some interesting things coming down the pipeline, which I think will drive supply, which could drive the price per unit down, actually, if there wasn't this massive immigration. So if maybe we had in London, or I guess in Canada, different federal policies, let's call it federal immigration policies. So talking about, say, a conservative leader that maybe didn't let as many immigrants, that would be bearish, I think, for London real estate. You got to remember that rates will fall. Interest rates will fall from the 6-7% they are now to 3 or 4% again. That will come back. AI will allow us, and just in general, technological advancement and efficiencies will allow us to return back to a low interest rate environment. So when that comes back, real estate will come a roaring in price. But in the short term, there could be pain. In the immediate short term, I think there will be bullishness because the spring market is going to be hot. There's a lot of pent up demand. So in the short term, bullishness. In the long term, bullishness. In the medium term, I don't know. We could retest the bottom again. Hard to say. Crazy One says, these crypto noobs are just using past data to forecast the future, but they lack macro SATA analysis. The NASDAQ has reached full FFIB extensions as close as the Dow Jones. So yeah, there's definitely, yeah, some of the readings are definitely, I would say it's a bit overbought right now. I don't know. The NASDAQ just has been on a tear. I am short the NASDAQ, to be fair. It's not a huge short position. I've not, blown up my whole portfolio. I have sold calls and bought calls. So I've defined where my short is, but I am short-term bearish on the NASDAQ. But remember the first rule? Warren Buffett has told us many times, one of the greatest investors of all time, the market will be irrational longer than you can stay solvent. And so things will, the market is supposed to be efficient and perfect, and it's not. People, they were pricing in rate cuts in January. They were pricing in rate cuts in March. Now they're not even pricing in rate cuts in May. And it's like the market's perfect. It's 18 months forward looking and it knows everything. And it's like, what we know is that the past has told us that the market is not perfect, that people are stupid. They get euphoric, they get dumb, and they make bad decisions. And that's human behavior. And that is how we make money. Viv says, how do you handle it when a property you buy has an active LTB file with the person you're purchasing it from looking into a new investment property but hesitant as the current tenant has filed one? I try to avoid those properties like the plague. We have one property like that right now, and we hired a shark paralegal, and she's handling everything, thankfully. They're a pain in the ass. The landlord-tenant board is brutal here in Ontario. Tenants have all the rights. I mean, it depends. Newer buildings right now, you can set the rents to whatever you want in Ontario. There's no rent control on a newer built property. I think built, like if you bought a 2019 built property right now, you go to the tenants and say, hey, your rent was $2,000, now it's $4,000. GTFO or pay. Like, get the fuck out or pay. And if they don't pay, you can evict them. Now, the process to evict takes a long time. The tribunal is backed up. They're working on that, and hopefully that gets better, and hopefully we can get through, these backlogs, right? And if they do, then it's not that bad. There's a process to it. But I try to always buy vacant possession. If I'm going to take on a property like that, Viv, I'm going to be damn sure that I'm getting a huge discount to deal with that. So for me, if I'm dealing with a tenant like that, I'm going to evaluate the risk. So the risk is that tenant could take 10 months to get to hearing, and before you get an order and an eviction, it can take a year all in, right? So value, what is the rent for a year? If they're paying $2,000 a month, that's $24,000. Now what's your headache worth? What's your legal fees? Because they could stop paying for a whole year potentially. If you're in an active LTB case, maybe they stop paying. It takes 7 to 12 months to get them out. I would say the risk is $24,000 if the rent was $2,000 a month. $24,000 in risk there. Your headaches got to be worth $10,000 or $20,000. Whatever your headache's worth to you, put that in as a value. Put the legal fees in it as a value, and then throw another contingency of $5,000 or $10,000. And add all that up, and it's $50,000 or $100,000 discount, and you find that's worth it for you, then take on the deal. So yeah, it just depends on whether you think it's worth it. For me, the headache factor has to be $100,000. I don't want to do anything unless I can make at least 6 figures. That's because, to me, anything less than 6 figures isn't worth my life's blood, my life's energy. I only have so much of it. So it depends. When I was younger, you asked me the same question 10 years ago. When I was 20, I would have done it for $5,000. A $5,000 discount would have been enough. So it just depends. Crazy One says, so only to watch Russell 2000 small caps to have its final catch-up yield chasers. Someone could say that. You could also say that the Russell is more linked to reality, and that big tech is just overvalued, and there's a correction coming to the NASDAQ, rather than that the Russell is going to catch up to the NASDAQ. I don't know, to be honest with you. I wish I had a crystal ball. I wish I knew. I have theories and hunches, and we all have theories and hunches, and it sucks because the stock market is all about guesswork. That's why we buy a little piece of everything and we wait. Because if you buy a little piece of every stock and you wait, you always win no matter what over a 10 or 20 year period. The only way you lose in the stock market is if you take degenerate plays, like going all in on a few names. Don't do that. That's stupid. That's how you lose everything. If you own a little piece of everything on every index and you're always in the long direction, meaning you buy the shares, you hold, you collect your dividends, you don't ever sell when it's down, and you wait over the long term, and when there's no fear in the market, you could rebalance your portfolio. You don't ever overreact. You look at your whole portfolio once a year, you make slow, calculated adjustments. You look at tech, you're like, oh, tech has become 30% of my portfolio. I'm gonna sell some of the tech off, I'm gonna rebalance into the other assets in my portfolio. That's a nice way to do it. That's a careful way to never lose. You will always win at the speed of the S&P 500, that is prudent advice. For a long period of time, you'll become a millionaire no matter what. People like the flashy, they like to get rich fast. That's how you lose money. That's how you end up with zero. BTC taking all liquidity from the alts. That's true right now. Alts tend to run after Bitcoin. Bitcoin tends to lead the way, and then the alts tend to follow. The rates are paused. They likely have cuts next, which means likely will be initiated by crashing the stock market. It is possible, actually, when they typically people think that the lowering of rates crashes the stock market, but more what happens is as rates get lower, it's because there's pain. So not necessarily that the rates falling crashes the market. It's that the reason rates are coming down is because things are fucked in the employment sector, and that things are really bad actually in several sectors. I know it's weird because like the world is on fire. Every business owner I talk to is struggling right now. Every real estate investor I talk to is like on the brink of going bankrupt. You talk to like hoteliers, you talk to any small business, and they're all suffering right now. These high rates are crushing business. It's making it hard to do business. Input costs are high, and it's hard to pass those costs on to consumers. Even though inflation is running wild, it's weird that some of these businesses I've talked to aren't able to pass their costs on to their consumer, onto their buyer, their customer. So there's a real challenge in the market right now, and no one's talking about it. Like you talk to the average person, and they're working 2 jobs, 3 jobs to survive. And it's like, well, employment's high, and that's because everyone has 2 fucking jobs. They're working at Walmart in the evenings. They're driving Uber. And it's like, I don't know how they're cooking the books to make things look like they're okay, but things are not okay. This credit card debt per capita is the highest it's ever been. People are indebted up to their eyeballs with 20% credit card debt. The world is not okay right now in North America. There is pain. The Chinese stock market's collapsing. Countries like Russia are struggling. Europe's struggling. The United States is struggling. The only sectors that are carrying the whole market are the Magnificent Seven. You know, your Nvidia and your Metas and your Microsoft and your Apple, which are roaring. And it's like, I don't know. I don't know how much higher it can go. Can they carry the whole world? There's a lot of hype and there's a lot of enthusiasm around what AI will deliver in terms of efficiency. And I think it feels a lot like the dot-com bubble. It feels a lot like 1999, which is a lot of promises. And the internet is going to change the world, but it didn't change the world overnight. AI is going to change the world. It's going to deliver insane efficiencies over the next 20 years, but it's not going to happen overnight. And they're pricing in like it's happening in 12 months from now, 18 months from now. And I think it's a lot longer path there. People think they can do a lot more in a short amount of time. But over a long period of time, you'd be surprised how much we can do. But over a short period of time, we overestimate. We think we can do way more than we actually can. So my thesis is that and this cycle could go for 24 months. This AI bubble, the dot-com bubble went for almost 30 months, I think, from start to finish. And we started this bubble 2022 end. So it might go till 2025. We could have another rally year in 2024. We had a really strong year last year. A pullback would be healthy, but the market doesn't have to be healthy, you know? Discount rates at 7% right now. Like you can get risk-free returns at 6 and 7%, and yet people are diving into tech stocks with a 2% a year payback at current cash flow, all on speculation of future selling the stocks to shares to someone else for double later, right? And it's like that's scary. When people start speculating like that, really, really scary. So when people get greedy, be fearful. And people are really greedy right now. Risk assets are on. So when people get really greedy, I'm a little bit fearful. Hard to predict the top by doing that, but the greed index is near all-time highs for a sustained period we haven't seen in almost 2 decades since the dot-com bubble. So there will be a top. I don't know where it is. I don't know when it is. None of us do. But I think the fall for tech will be just as quick as the rise was. So I think we could see months where it was down 10, 20%, just the same as we saw months where it was up 10, 20, 30%. So just be careful out there. If you're holding those tech risk assets, make sure you buy some hedges. You can hold those assets if you believe in them to the long-term future. Take some of your profits and buy some risk hedges. Buy some puts, sell some covered calls in your portfolio. Protect yourself against potential volatility, and you'll be better for it. Yep, earnings coming up for some of the tech names. Definitely don't buy GME. That's dumb money right there. You look like you could try to smoke a Bitcoin pothead for sure. Um, thanks, I guess. I'm kind of going for the surfer vibe, so I'll take that. I don't smoke, so that's cool. I'll take that. I'll take that relaxed vibe. I look like what you're saying. What's the next big crypto? Doge? I don't know, to be honest with you. I hold some tokens and things like Ultra UOS, which is like a gaming token. I think that I think you shouldn't put all your money into one or two risk assets. I think you should spread your money out over many different asset classes. That's the smart thing. Buy the S&P 500. Buy the world indexes, your VTOs and stuff. Maybe buy a little bit of Bitcoin, sure. Maybe buy a little bit of gold and silver. Buy some real estate. There are lots of great investments out there, but don't put it all in one thing. And don't buy like NFTs or something with no real intrinsic value. Just be careful, guys. GME is dead. Great answer, no problem. Thanks, appreciate that. I've had an actual haircut at a barber in years. I've just been cutting my own hair with some scissors. My wife's been helping me at the back of my hair, and so I've just been letting it kind of go. I don't brush it or do anything to it. So, what's nice about this early retired lifestyle is I have no boss. My investors care about my performance, so they don't care what I look like. I'm not trying to impress anyone. I can grow my hair out. Probably I'll go bald at some point. So, I'm going to be 32 this year. So how much longer am I going to have hair? Most men are bald by like 50, right? So I might as well enjoy the hair while I have it. My kids love it. They, I have 3 girls, and my girls love to braid it and play around with it and stuff. So I'm enjoying it. It's, why not? I had short hair for a long time. When I worked in the corporate world, I had to deal with all of that. And, fuck it. I hung my knee pads up a long time ago. I don't need to serve anyone or do anything. There was a long time where I was in the corporate world and I was told I couldn't make certain posts on Instagram. There wasn't even Instagram back then. I couldn't make certain posts on LinkedIn because LinkedIn was a thing back then. I had to take down my LinkedIn. I had to take down my blog. I used to have a blog, 25. It was 24 and free, and I changed it to 25andfree.com. And I spoke about financial independence. And I was like, why isn't everyone retired? Like, anyone can retire in 10 years. And back then I was like, that was my thing. Like, I just couldn't understand why these people were working in jobs that they hated, living lives that they fucking hated every day. Most of them like divorced, fat, going into work, like just miserable. And I'm like, there's a better way. You can just literally save like half of what you earn and invest it. And over a long period of time, if you invest it wisely, you guarantee that you have enough money from passive income that you don't have to work again. You can replace all of your living expenses from passive income in your investments. Like, why isn't everyone doing this? Like, just buy the S&P 500, buy some dividend stocks, buy real estate, buy anything. Just don't spend everything that you make. And like, the problem is people are dumb. I worked with people who made 100 grand a year who had the newest Apple Watch, the newest phone, the nice car. They had everything. They were going out for lunch every day, spending $100, getting drinks and stuff. And it's like, those decisions over their lifetime cost them tens of millions. All these people working in the corporate world where they just make bad decisions with their money. And they spend on shit that isn't an asset. They consume it. And if you make smart choices when you're young, if you're 18 years old and you're watching this, like when I found financial independence when I was 16, and I was 17 in my dorm room. I went to university on a basically full ride scholarship at Western, and because I came from a poor family, so that was the only way I was going. And I'm sitting there in my dorm room, and I'm like, and I'm working full time. So I'm working a full time job, and I'm going to school full time. And I'm like, I still was able to find time. I don't know how people say they can't find time. Like, you work a fucking 9 to 5. What are you doing from after 5 o'clock till midnight? You have 7 hours every day, and on the weekends you have 16 hours every weekend. Each day on the weekend. You have 32 hours on the weekend plus Friday night. So you have 40 hours just from Friday to Sunday night. What are you doing for that 40 hours? Most people are sitting around vegging around the TV, and it's like, do something with your life. Take a couple hours of that every day and work on a side hustle or a business or something. And it's like, if you do that when you're young, from you're 18 to when you're 30, you fucking stop when you're 30 if you want to. Just do that for 12 years, and I guarantee you'll be a millionaire. Just save whatever you make from your side hustle. You can still live a good life, like, we were still doing things with our life. We still go for amazing walks and bike rides. I went to Brazil on points on my credit card. We went on trips. I've been to Africa. I've been around the world, done stuff, and I had no budget, like zilch. I was able to do it. So I'm a living example. You can live frugally and live a good quality life. And that's what I hope more people will find this channel and find this way of life. I talk less about the frugality side now because I guess my income's so high now, right? Like because my assets produce me like 500,000 to about $1 million a year in a good year, 500,000 in a bad year. That passive income for me has made me blind, I guess, to who I used to be. You know, the frugal guy that I used to be. And I'm still hella frugal, but just less frugal now. And so now it's about frugality of my time. But anyone watching this, like you can go from, I made 50 grand a year salary and I was saving all of it. My wife made 40 grand a year. We were living on half of hers, the house hacking. So we had no costs. I bought a house. Well, first I rented a house, then I split it with tenants to live for free. Then I bought a house, did the exact same thing, let tenants cover almost all of our costs. So we're living for free. And when you walk to work, you have no expenses. I bike to work. My work was like 9 kilometers each way from my house, which is like I'm a pretty fast cycler, so I could bike to work in like 20 minutes. It was a great workout on the way to work and the way back from work. I actually missed that life. You know, I was in really great shape. I was super fit. And I was just like, I didn't have to go to the gym because my life was, I would cycle home from work, or I'd cycle over to my rental property and I go do some materials on my back and I go do some manual labor for a bit with the trades guys that I was hiring. And it's like, that was my gym. I didn't need to go to the gym because I was doing that stuff, right? You can build the life that you want around productivity for a while. And now I don't need to work again. I could just stop and do nothing and just live off what I have. That's a nice feeling. For me, that's really comforting. It feels really good. I came from an insecure, unstable home, moved around a lot, you know, in foster and with different people. And so for me, stability is super important. And that's why financial independence was that for me. It was like my fortress of fucking solitude, my safe fuck you money. And now I play, now I have fun. And now if I buy another motel and we have some success, maybe I'll use that to buy a private plane or something. Or, you know, now it's like we're talking about tax havens and talking about, you know, living the best life. Like Canada's cold as hell in the winter. So like going somewhere warm, that's a way better lifestyle improvement. So now it's like, I need a reason to go and do something. It's like, I need a purpose. And so I'll take on a hotel deal or I'll push myself to try a challenge to do something. And the reward has got to be now I just look for like some sort of improvement to my life. Like what would improve my life? It's like, okay, well, you know, it'd be nice to be somewhere warm in a tropical place in the winter. So it's like, okay, well, that's the goal now. So what do I have to do to unlock that goal and still be frugal? And so I try to do everything with like living on 10% of my passive income. So if I spent all my passive income and something happened, like my family got cancer or something, I want to have funds that I can afford to deal with those risk scenarios. So for me, it's all about planning and all about, you know, risk management in that sense. Do you use MLI Select for commercial mortgages? You should. If you're going to get into commercial properties, the MLI Select program is fantastic. The government actually, here in Canada, actually sponsors or subsidizes the cost of borrowing. If you go through CMHC's MLI Select commercial mortgage programs, you can do as much as 95% loan to value on a $10 million commercial building, like a big tall apartment building. A lot of these guys are putting $500,000 down on a $10 million building. And the government backed, you have to meet certain criteria for, you know, efficiency of the building or certain rent targets. There's several different ways you can apply into these programs, but they lend to you at prime minus 2%, prime minus 2 and 3% in some cases. So it's like, if prime is like, if you go in 2021, some of these mortgages were at 1.1% in Canada, 1%. And they were 50-year amortizations. So they would give you 95% loan to value, 1% cost of interest over a 50-year amortization. That was how Toronto, London, Vancouver, all those cities in Canada got so bloated, and their cap rates came down to 3 and 4. You know, it's like that's how that happened. Is the government basically through CMHC, I guess, sort of sponsored or subsidized the cost for commercial real estate. You don't have that in other countries in the way you do in Canada. So that's part of why our bloated real estate economy is where it's at, is that the cost of money was so cheap. Now money has gotten extremely expensive. So some of these guys are renewing these 30-year mortgages, whatever. They're going back for a renewal, and they were running it at 2%, and now they're running it at like 5.5%, which again is still really cheap when bank prime is 7.2 in Canada. But that's just, again, government subsidizing 2% of that. But yeah, I'm looking to see if I can, the current motel that I have, I'm looking to see if I can, it's an extended stay motel with kitchens. I'm like, can I go to the city and get it rezoned as an apartment building? Because now I can go back and get a 95% loan to value refinance, pull all my money out. It's a tax in Canada and in the US too. You can refinance out of a real estate asset tax free. So if I buy it for 1.5 million and I refinance it at 4 million, 95% loan to value, I could pull out all my original money and $2 million tax free against that asset. And when you eventually sell the asset down the road, you pay some tax on it. But like, there's no tax now. I hold the asset for 50 years and pay no tax until I'm dead. Let my estate worry about it. Let my kids worry about it. You know, it's like, so that's pretty powerful. You know, and you get depreciation on that too. So it's like, it could be a tax loss on paper, meaning it's giving you a write off against your other gains in other areas of your life and other businesses and buildings that you have. So it's like, real estate is so overpowered from a tax perspective. It's just unreal. Super, super sexy. It's the only thing that is still attractive about Ontario is that the lending policies here are fantastic in a way that they aren't in the US. Now, the US is more competitive, cap rates are better. I'm going to continue to build a portfolio of motels in the United States, probably in mostly Florida, as well as here in Ontario. I like both markets for investing in for different reasons. Can you teach me how to make money in real estate? That is what I do. That is literally what I do on Instagram. I'm like Rosehart. Look on Instagram and Facebook. You'll find a blue check mark. I'm blue check mark verified on both. Yeah. Facebook, I've been blue check marked for a long time. They gave it to me. I was one of the first people to get blue check mark on Facebook. I was really proud of that one. That was when I went on the Tamron Hall show, which is an ABC production in New York. They flew me down. They had me go on the show. And they told me to pump up my frugality aspect. So we pumped that up a lot. I talked about how we rented rooms and walked to work and the frugal shit. And they wouldn't let me talk about anything real estate related, which was a shame. But they wanted the shock factor, I think, for ABC. And when I went on that show, several other media outlets ran me. In the UK, I was the #1 running story, talking about this guy who retired at 24 through frugality, self-made. And at that time, they gave me a blue check mark on Facebook, which was kind of cool. I was like a little celebrity at the time. I was getting tens of thousands of clicks. And now, it's funny how that's gone away. No one is clicking on Mike Rosehart. It's funny how that fame goes and comes and goes so quick, right? And it's just I got my loyal followers, a couple thousand of you guys who tune in my Instagram every day, and a couple thousand of you guys who tune into YouTube too. I think you're a different demographic, but yeah, life's good. Yes, definitely can help you teach. That's what I do. All I do is talk about real estate all day, all the time. I share a ton of nuggets on Instagram on my stories. I post there about 8 times a day. Are we connected? No? Should I go onto Wi-Fi now? Should I go onto cell phone data? If I'm not connected right now, I'm just going to switch over to my cell phone. Let me know if I'm connected. Can you guys hear me? I think it's still live. I don't know. Is it live? Oh, should I switch over to my cell phone? I have 80 gigs of cell phone data, so I could just live stream with 5G cell phone, I guess. Weird. Okay. The internet looks like it just reset. My modem is reconnecting. Anyway, I'm gonna wrap this stream up. Looks like I'm almost done anyway. Actively managing Airbnbs, I feel like it's also the same issue as managing a large stock portfolio. Not passive at all. Totally true. Real estate is not passive at all. When you first get started in real estate investing, whether you're placing tenants or you're running Airbnb, it is a business, and it is easy to fuck it up and lose money. I don't want you to think it's passive. That's a myth. It's not true. It's very hard. But if you stick with it, number one, you get paid pretty well for your time if you do it right. Number two, the business can be scalable very well. As you build up, you can bring in power teams and the right people, and it becomes passive. If I can get it's really hard right now. We have 4 motels, and it's really hard with only 4. But if I had 20 motels, it would get a lot easier, because then I have a chief of operations, I have a COO, I have an executive assistant, I have staff and systems in place. It's really hard now, but it gets easier. So my advice is either go all in and build the systems and grow, or treat it passively, bring on a manager, and accept the fact that it's gonna hurt your margins a bit to outsource everything to a third party. But ideally, to maximize your profit in real estate, you need in-house management, and you need to control that piece of it. Unless you buy super quality assets that, honestly, I haven't seen a good Airbnb manager that cares for your property. All these guys charge 20% of growth. A lot of them charge 20% of the revenue. They charge another 10 or 15% in cleaning fees. They hit you with maintenance, another 10 or 15%. That's 50% of revenue right there. I just listed off those expenses. Then there's taxes. You got to file tax forms where you got to remit tax to the government in the state of Florida. If it's in Ontario, you have to remit 13% HST to the government on all bookings. So there's another 13%. So you're at 20% for the management company plus HST on their management fees. So that's like 25% goes to management fees. Then cleaners are another 10 to 15%, which the guests pay for in revenue, but it's coming out of your revenue. Then you've got maintenance, which is another 10 or 15%. You got to repaint the units, you got to replace the furniture. Furniture depreciation is a huge expense for Airbnb. People spend $10,000 furnishing a unit, and within 2 years, most of the furniture needs replacing, has issues. So there's challenges there. And then your taxes, your 13%. That's already almost 2/3 of your revenue is gone on a small single family house on Airbnb. The Airbnb manager is often making the same as your net profit after your mortgage, your utilities, your expensive insurance, all the costs that go along with running an Airbnb. And there are many. So while I love Airbnb, without scale and in-house management, it's very hard to make a good return on it. Now, they'll make a good return, but is it worth it, I guess, is the question. Because a lot of these guys, you run the numbers and it's like, you're better off almost just doing private lending in some cases. So that's where, like, at scale, it's very, very attractive. So you got to get to the point of scale. And that's what I'm working towards right now, because it's just so much easier from a return on time perspective. You will beat the market, but it has its challenges for sure. There is no housing shortage in GTA. Everyone and their neighbor used their home as a piggy bank and bought investment properties. All that leverage will be flushed out soon. Lukey tweets, I don't know if that's true. I think there is still quite a shortage in terms of, there are a lot of people crammed into small places. Like you watch some of the articles in Brampton, there's like 20 Indian students living in one house. There is definitely a lot of tenants. They just can't afford to pay the rent in GTA. But if rents came down a little bit, there is an excess of people that that are looking for a place to live. We have not enough. The data is clear. We are short on housing, but for sure that the interest rates have driven cash flow to a point where it's not great for a lot of these investment property owners until rates fall. No problem, guys. Happy to help. Viv, I'd be happy to share a few paralegals. I have like 3 or 4 I could share to you. They're all slammed and they're all super busy and it's hard to find them, but do a Google search or join some of the Facebook groups. You'll see some really great names, and some of the Ontario Landlord Watch group is a good one on Facebook. Join that one. They've got a lot of really great paralegals in there. Highly recommend. Are you still bullish on your blue chip Canadian dividend stocks? Yes, I am, Varun. I am definitely bullish on my Canadian blue chip dividend stocks. They are not performing well. The last year, I think I'm down like 15%. So that portfolio is not doing well, but I'm still bullish on it, more now than ever. I think there's some turbulence ahead, but over a 10-year plan, if you look 10 years out, I think those will perform well. As rates fall to 2 and 3% later, it will be a very good play, I think, over the long term. Short term, there's some turbulence ahead for that portfolio. Happy Valentine's Day, William. Thank you. There we go. Homeschooling versus traditional school. My kids are back into a good Catholic school right now. We do a hybrid approach. So I pull my kids out. We go down to Florida. We do some homeschooling. So we do both. I go back and forth on both. We're doing sort of a hybrid approach. So my daughter can opt out of certain classes if she wants to. It's sort of the ideal. So we choose when we want to put our kids in school or not. We have a great homeschool program. I'm looking to bring on a nanny full time that would help with that as well. My wife's an at-home wife that helps the business, but she's she's big into that. My daughter just got her grade 2 report card and she got straight A's in every subject. So I'm sure that it's working. When she's testing against her peers, she's doing very well. So homeschooling, we pulled them out. We've done the homeschooling thing. We pulled them out, put them back in to test them to see which one they like. If they want to go to school, we encourage that. When we travel as a family, it doesn't make sense to switch schools. So when we're here, they go to one of the best Catholic schools, I think, in Ontario. It's a fantastic school. Great program. They have a great teachers. The students that are going there are all well-to-do. Not that that matters, but it does matter. I don't want to be like, rude, I guess, to people who are of lower socioeconomic status, because I grew up poor. I know what it's like. And it's wealthy people raise better kids. Just they have more time and more resources, and that's important to raising good kids. I'm an exception to the rule. I shouldn't have turned out as well as I did, given I was malnourished and deprived as a kid growing up. So I'm an exception. You definitely want to give as much as you can to your kids without spoiling them. All right, everyone. Have a good night. We'll see you next week. The secret to unlocking wealth for you is 3 levers to control your financial future: spend less, earn more, and maximize returns of the difference. That's it. That's the secret formula. It's like everyone's like, what's the secret, Mike? How do you become a millionaire? How do you retire early? And it's like, just master these 3 things. Start spending less, finding value on everything you buy. Find a way to earn more money. Pick up a side hustle, buy a rental property, which is like a part-time job, or build a business. And then when you start making the spread between, what you're earning and what you're spending, there should be a gap there. You shouldn't be spending everything you're earning. That's a problem. If you're spending what you're earning right now, you either have an earning problem or you have a spending problem, or both. Create a gap. As soon as you do that, you start getting rich. And then as soon as you start saving, it's like, well, what do you invest in? Well, don't be a degen and put it all in crypto. Spread it around a little bit. Don't go to the casino. Don't buy like everything in GameStop and Tesla. Spread it around. Put it in a lot of great places, a lot of great different buckets. And over the long term, you'll build exorbitant amounts of wealth. You will be a millionaire guaranteed. In 5 to 10 years, you can be retired. If you started at 18, you'd be done by 30. If you start at 30, you could be done by 40 if you wanted to. Especially because when you're at 30, you're already in your prime earning years. When you're 20, you're still trying to figure shit out. You don't know what you're going to do. But as you get older, your earning power increases. So it gets even faster to get there, and your experience increases. So, work with your strengths. All right, everyone. See you next week. As always, you know where to find me. And I'll see you next week, 7 to 8 p.m. Eastern Standard Time-ish, give or take 15 minutes. I go live every Wednesday without fail. I've never missed a stream in 6 years. We're hundreds of episodes in now. You can watch the replay of all of these episodes. You go to the Wise Wealth section watch list on YouTube, the Mike Rosehart Show. You can go there and watch. There's hundreds and hundreds of episodes where I've gone live for hundreds and hundreds of hours, and we've just had a lot great conversation. You guys drive the topics of the conversations. I answer all of the questions for free every week. Thank you, everyone, for tuning in. We'll see you next week. Cheers.